3-minute trader tip. What are the advantages of knowing correlated currencies? You'll often hear people talk about how some currency pairs are correlated. And that's all very well and good knowing that this is the case, but how could we use this practically? Generally speaking, correlated currencies, and indeed correlated assets, have a tendency to move in the same way with a specific set of market sentiment circumstances, for example in response to data. It's an important note to say this doesn't necessarily mean they move to the same degree, either in percentage terms or price, nor that they won't also move against each other in certain circumstances. But examples that are fairly obvious would include the Aussie-Kiwi pair, or the Euro-GBP, or even the USD-Swiss franc. There are many sources where you can get this information as to how correlated various currency pairs are, but one just needs to look at the daily ATR of pairs, or pairs that appear to spend a lot of time in sideways trend, to get this fairly quickly. As traders, we're often looking for ways to become more time efficient, so our knowledge of these can help identify opportunity in multiple currency pairs. Therefore, if we see a large movement against one currency, we may well see it also in a correlated currency. Let's just show you a quick example of that. Let's look at the Australian dollar Japanese yen on a 15-minute chart, and you'll see we had this big bar downwards earlier in the session today, and subsequently that long bar often provides an opportunity to trade the reverse, as we saw here, and ultimately this actually almost returned to the level prior to that drop. However, if we look at that and think, well, maybe that's not the ideal, we're waiting for a breakout on this, so we'd actually be waiting after that first candle move higher, then we'd be waiting 1, 2, 3, 4, 5 bars until that was the case. So as we're waiting, of course, what we can do is we can put on the New Zealand dollar yen, a correlated currency, so we'd expect it to move in the same way, and we do see it do exactly the same. In this case, we're going 1, 2, 3, 4, 5, 6, 7 candles prior to that move above the price close on this bullish candle here. So it would actually be delayed getting into the Kiwi yen compared to the Aussie yen that we had a look at already. So we can keep an eye on both, see which breaks first, and then that gives us the optimum trading opportunity potentially. I hope that gives you an example of one way that this can be used. Trade safe, and we'll see you again soon. Bye bye for now.